Welcome. CPA Planet lessons help you get more points on your CPA exam. These lessons provide clear explanations from the student's perspective, visual learning, and we even try to make it interesting and entertaining. Enjoy the lessons and pass the CPA exam. Okay, this is a sample lesson of S-corp. It's S-corp overview and S-corp formation. The full lesson's available at CPA Planet, so please enjoy this sample S-corp lesson. Let's start with the table of contents for the S-corp. What we're going to be studying, we'll study the overview of S-corps, their formation, operation, termination, re-election, an interesting area for S-corps, not a difficult one. We're going to study S-corp taxes. There are 3 of these we study in the CPA exam. LIFO Recapture Tax, the built-in gains tax, and the tax and passive investment income. All of these are 3 taxes that S-corps could pay. We're going to study the accounting rules. We're going to study basis, very important for S-corps, income, separately stated items, income allocation, the AAA account, the OAA account, distributions to shareholders, and loss limitations. So let's get started by studying the overview, characteristics of an S-corp. So we study this also in business structure when we look at entities. Basically, overview S-corps are a hybrid of C-corps and partnerships. They're pass-through entities. This is a very important point, basic point about them. They don't pay any tax themselves, except for very unusual ones which we mentioned. Normally, their income flows through to their owners who pay it on a Form K-1, just like a partnership. Okay, now, to establish an S-corp, again, we study this in business structures, formal rules to establish it. So you must fill out official forms. This is similar to a C-corp and not like a partnership. So their income structure is like a partnership, but the formation rules are like a C-corp. It's complicated to form it. You need to follow the forms. Okay, we talked about flow-through income. There's no tax at the corporate level normally. S-corp files an 1120-S. C-corp files the 1120. S-corp files the 1120-S. But most of the income, well, the S-corp prepares a K-1, and most of the owners fill out their own K-1 forms, and that's how they pay. There are 3 entity-level S-corp taxes paid by the S-corp. We talked about this LIFO recapture, built-in gains tax, and tax on passive investment income. And then there's a couple accounts which accumulate earnings, and then those are used to calculate income and taxes. We'll cover those in more detail later. All right, let's talk about formation, election. S-corps are set up either from the beginning as an S-corp or you convert from a C-corp. If you convert from a C-corp, then 100% of the existing shareholders must consent to the election. This includes voting and non-voting shareholders. The effective date of the election, this is frequently a test question on the CPA test. March 15th decides the timing. If you elect before March 15th, it's effective January 1st of the current year. If you elect after March 15th, you are an S-corp as of January 1st of the next year. Election is always effective on the first day of a tax year, calendar year. So March 15th, you can elect before or after that date, and that determines the year you will become an S-corp. Rules of formation. This is also a very common question on the exam. You have to be a domestic corp. You have to have 100 shareholders or less. You have to have individuals, estates, or trusts only. No corps or partnerships can own an S-corp. An S-corp can own shares in a C-corp through the stock market or whatever, but C-corps cannot own S-corps. And only one class of stock. So let's review this. You need to remember this. It has to be domestic, 100, one class of stock, individuals only. 100 shareholders or less. Those shareholders must be individuals or estates, not C-corps. One class of stock, and domestic. Okay, family members, a little more detail. Family members may elect to be treated as one shareholder. So that's common ancestors, linear descendants, spouses. So you and your son or daughter could elect to be treated as one shareholder. No more than one class of stock. Differences in voting rights are allowed. Preferred stock's not permitted. So only one class of stock, but voting rights can be different. As I said, an S-corp may own an interest in a C-corp, may even own 100% of a C-corp, but a C-corp may not file a consolidated tax return. An S-corp may not file a consolidated tax return with a C-corp. Okay, tax impacts of formation. CPA exam loves this kind of thing. What happens when it's formed? What are the tax impacts? You got the number one 80% or more scenario, which is actually similar to a C-corp. If an S-corp is formed by owners who give cash services or property totaling 80% or more of the S-corp, this gives control of the S-corp to those owners. This then becomes tax-free to both the owners and the S-corp. So you got the 80% tax-free just like a C-corp, 80% tax-free. The basis is a carryover basis. Less than 80%, if you've got people who make up less than 80%, then the transaction is taxable at the fair market value of the stock. Okay, and that's the end of this S-corp sample lesson, S-corp overview, and S-corp formation. The full lesson's available at cpaplanet.com. Hope you enjoyed the sample lesson. Keep studying and pass the CPA exam.